Hi everyone, this is Crypt'n'Tricks channel, and we will look at financial analysis of the company and we'll try to understand what does it need for. So let's go. What is it? A company's financial analysis allows to determine company's current state, opportunities and problems. This valuable information is used both for making current management decisions and for strategy development. Investors, shareholders and business owners are also interested in obtaining such information. Therefore, each company needs specialists who know how to make adequate conclusions about the results of activities and make reasonable forecasts based on data from reports. What does the analysis of financial indicators of the company provide? Analysis of financial indicators is one of the methods of assessment of the state of the company and its capabilities in the future. It serves as a basis for strategic planning, helps managers to identify resources and areas of further development of the company, to find its strengths and weaknesses. Analysis of financial ratios is carried out to identify the best ways to achieve the objectives of the company, such as increasing business activity, asset turnover, ensuring liquidity and financial stability, increasing the profitability of the company. The analyst should understand the variety of figures from accounting and management reporting to be able to determine the effectiveness of the current activities of the enterprise and to develop recommendations for its increase. It is necessary to know that the main thing in financial analysis is not the calculation of figures, though a financial analyst must be able to calculate them, but the right interpretation of the results is more important. The effectiveness of decisions in company management depends on it. Main groups of financial analysis indicators. More than 200 ratios are used in financial analysis. All of them characterize the four main sides of the company's activities: liquidity, turnover of assets, profitability, market value. For each of these groups of indicators, their own coefficients are calculated. They may differ depending on the objectives of the analysis and the users for whom the information is intended. Liquidity indicators. The company's ability to meet its obligations at the expense of its current asset is one of the prerequisites of its financial stability. Liquidity ratios allows us to adequately evaluate it. Funds turnover ratios. The turnover ratios allows assessing of the efficiency of the company's asset and capital management. The basis for their calculation is revenue from sales of products or services, its ratio to the average annual amount of assets, accounts receivable, and accounts payable. In order to carry out the analysis, it is necessary to collect data for the last 3-5 years, to establish positive or negative dynamics, compare the results with competitors in the industry. In addition, calculate the asset turnover period using the formula. Turnover period equals reporting period divided into asset turnover ratio. The lower the value, the higher the intensity of use of the company's assets. In the areas of wholesale and retail trade, the period of asset turnover usually is less than in industry and construction. The turnover indicators are most valuable for internal information users, for the company's management. The growth of turnover indicates an increase in the efficiency of the use of assets. Profitability ratios. Profitability ratios reflect the degree of profitability of an enterprise. They are calculated as the ratio of profit to the value of the indicator, the profitability of which we find. Indicators for calculating the profitability ratios are taken from the management or accounting data, balance sheet and statement of financial results. The higher the values, the more effectively the analyzed resources of the enterprise are used. Both internal users of financial information, company managers, and external owners and investors are interested in profitability ratios. Profitability indicators play an important role in the development of the investment, financial and marketing strategies of a company. Market indicators. Analysis of market activity makes it possible to draw a conclusion about how the market evaluates the efficiency of financial and economic activities of the company, rationality of its dividend policy, and the most important thing, its attractiveness for shareholders or investors. An important indicator taken into account when analyzing the market ratios of the enterprise is the value of its shares. If it increases, it means that the market evaluates that investments are used rationally and the efficiency of operations grows. Dividend income is another important indicator which characterizes the percentage return of cash to shareholders on the capital invested in shares. The higher the value, the more profitable the shareholders' further investments in the company's activity. Potential investors are usually interested in the quotation coefficients of shares. It is calculated as the ratio of the market value to the book value of a share. If the value is greater than 1, the company is considered to be attractive for investment. An important addition to the analysis of market ratios is the company's value indicator. It is important for a financial analyst to know business valuation techniques, among other things. 4 important aspects of financial ratio analysis. In order to conduct an adequate analysis of a company's financial ratios, it is necessary to have a complete description of the company's financial activity of the period under analysis, the statement of financial results, cash flow statement, balance sheet, etc. Compare the ratios for different periods as well as statistical averages in the industry and the results of competing enterprises. Comparing the values obtained with the recommended to make a discount to the specifics of economic activity of the company. For example, for trade and industry, the limits of the norm differ many times. To carry out the analysis of indicators as a whole. For example, the liquidity ratio by itself is not very informative. To get an objective picture, it is necessary to analyze the indicators of different groups: turnover, financial stability, profitability. By calculating the financial indicators, you can learn about the current state of affairs at the company and assess its prospects. The competent analysis allows to correctly build a development strategy, improve the company's asset management concept, and borrowed resources management. The main source of information in this case is the statements of the organization, which it is desirable to monitor more often.